What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital YouTube channel. Today I'm so excited. I'm going to show you how to catch reversals in anything that you are trading, but I'm going to be showing you examples on these indices as you can see here. So number one, let's just go and start on the whiteboard right here. So what you see from here is 3 levels, right? So the way we count these levels, we count them as periods, right? So this is a day of rise, this is another day of rise, and this is day 3 of rise. So you need to see a minimum of 3 days, right? Or a minimum of 2 days after you have seen 3 days on the other cycle. We'll talk about that later. So what we want to do is, if you see 3 aggressive rises like that, you are waiting for what we call a formation, which is a peak formation, and that formation is going to give you either a double bottom, a double top, a head and shoulder, or any reversal pattern. And I'm going to show you how you actually trade these patterns and how you actually catch the reversals for you to swing. So for those ones of you who like to swing and who like to trade reversal, this video is for you. And if you are someone who is looking forward to that, watch till the end as I show you how to go about this thing. So first of all, let me talk about FundedNext. For all of you who are looking for capital to start trading, there is FundedNext, that or funded accounts. So what you do is simple. You buy an account, right? For example, if you want a $5,000 account, you buy it for 30 bucks. After you buy it for 30 bucks, you prove your skill. After proving your skill, you can then trade that account and make money. So they give you 80% of all the profits that you make, and they give you 15% of all the profits that you make during the demo phase. The demo phase is the phase that you are trying to prove that you're a good trader. So if you make profit on that demo phase, they give you that profit. So let's get back to our video and talk about the levels and the reversals. So right now, what we want to do is simple. We want to look at these 3 levels. Then what we want to spend most of our time is in the peak formation. So what I'm going to do now is to go back to the charts and show you how to actually look for these levels on a chart. So number one, what you want to do is you want to have what we call period separators. So these period separators that you see, those dotted lines that are going down, right, the vertical dotted line, those are period separators. So you want a move that is inside that period, right, and you count 3 of those, then you have what we call a move, and you are waiting for a what? For a peak. So what you do is very simple. We have this move in this period, which is a what? Which is a week, since we are on the H4. If you are on the H1, that would be a day, and we have another one which is a week again. Then we have the last one. Then the last move is what? Is this move that you see here. So what you do is you are now waiting for what? You are now waiting for a peak formation. So what do you do? When you see this, you mark the last order block before that move, what? That retracement that you see here, because now you are expecting a double bottom or a double top, and in this case you are waiting for a double top. So once you do this, we are going to what? To mark this, and you are going to wait for price to come back to this what? To this particular point. Then you execute from there, and I'm going to show you actually how you actually enter on the what? On the M5 time frame, all the way from the H4, H1, M15 and M5. I'm going to show you the entry. So right now I would just want to show you these 3 levels that you see. So number one, you need the 3 levels, then you need the peak to lock. After this peak is locked in, you start seeing that price starts going in the other direction, and you will be anticipating another 3 levels of what? Of drop again, which you see here. And right now what we want to see is a price retesting from what? From this particular point and going up, because we have counted our 3 levels, and now we are expecting price to go up. So this is how you're actually going about catching a reversal. Let me show you another entry or another pattern, right? So from here, what do you see? Remember, we are waiting for 3 periods of rise, right? 3 periods of rise. After that, you are waiting for what? You are waiting for your peak formation to what? To print. Then we have, this is a retracement, this is a retracement, and this is another level of rise, right? let's mark it like this. Then we have another level of rise, this one that goes beyond this. So these are your 3 levels of what? 3 levels of rise. What you see here is simple. After seeing this, what you do is simple. You mark your order block like this, and you wait for price to come back to this particular what? To this particular order block, as you see. So you wait for price to come back here. Remember, I said I'm going to show you the entry pattern that we are going to be using there. So without wasting a lot of your time, let's look at another one, which is here where we are seeing 1, 2, 3. This is H4, right? So you are seeing H4, which is this is at weeks of rise. So remember, you are catching the move for the week. If you are catching the move for the week, it means that if you catch that move correctly, you are going to swing for a whole week, or for 2 weeks if you can, right? So this is what you are doing. Remember, here, what are we looking for? We are looking for price to come back to this particular order block. But it doesn't matter if it goes away, right, or it breaks that particular high or not. What we want to do is on the M15. On the M15 or the M5, that's where we are going to what? That's where we are going to get our entry pattern. So the entry pattern is simple. Remember, when price comes back to that particular high or that particular order block, it will be what? It will be trending upwards, right? So what we want to see is to see a change in trend at that particular at that particular zone. You see what is happening here? Price is going up. If you can draw it, you can see that price is going up, and this is a what? This is actually a what? An uptrend of price going what? Of price going up. And here, your after price gets this horizontal black line, you start expecting price to what? Price to drop. So how do you do that? You go on to the what? To the M5. And on the M5, what are you looking for? You are looking for price to break a trend line that shows the channel that was going up, right? So remember, you want to see price breaking either of these lows, right? So we have that low, then we have this other low right here, and we have this other low, and we have this last low that we have here. So when price breaks this last low and breaks the trend line, that is confirmation of a what? Of a change of trend. So when price goes back to the trend line again, as you can see here, when price goes back to the trend line, as you can see, price retests the trend line and retests another order block that we see on the what? On the M5, which is this one. So the retest of this order block is what you are waiting for, and the entry trigger on this particular one is simple. You are just waiting for price to give you 2 black candles in what? In the M5 time frame. So after these 2 black candles, your entry is going to be actually above the high that you're looking for. So this is actually going to be your sell. This green line is going to be your sell. And remember, if you sell at that green line, you could have held for a whole 2 weeks, could have caught this whole move from this green line to this particular zone here, which is your what? Which is your low in this particular what? In this particular area. So this is how you actually do it. And I'm going to show you again the entry criteria that we could have used in this case to catch this move all the way. And this is H4. So you're going to catch this move from here to this low here. So you're going to catch this as a what? As a swing. So this is what you are doing. So what we do now is we go to the M15 and try to see what price was doing at that particular point when price retested this one, this particular zone, right? So what we do here is simple. We look in this area and we zoom in on the what? On the M5, right? We are zooming in here, and what do you see from here? So let's just so this is the what? This is the line that we want price to what? That we want price to get, right? So when as soon as price hugs this line, you go to the M5, and when you go to the M5, what are you looking for? On the M5, you are looking for what? You are looking for a trend line that actually breaks that particular what? That particular order block, right? So in this case, if you zoom in here, you are looking for an upward trend line that is taken out before a move can be established, right? So we have this trend line that is actually prominent here. So this is the trend line that we are going to draw. After this trend line was taken out by this move here, the trend line was taken out at this particular point, right? And you clearly see that you have your what? You have your low here. So what are you waiting for? You are waiting for price to actually come back and retest this particular what? This particular low after a break. So you want to see price as it is. So remember, the entry trigger always is 2 black candles if you want to sell, and 2 green candles if you want to buy. So in this case, what were you waiting for? You were waiting for price to give you 2 continuous black candles, which is what you got at this particular zone. So this was going to be your what? your entry criteria. And if we were to see it here, this is what your entry was going to look like, and your stop loss was going to go above this this particular zone here, and you're going to swing. And if it were up to you, you were going to swing from this particular point up to this particular point, or you were going to hold for a whole 3 weeks, because remember, this is a swing and you are catching a reversal. So remember, these pairs move in what? Move in cycles, and the cycle is 3 weeks long or 3 levels long. So you can hold for 3 weeks or you can hold for 2 weeks, depending on how strong your lever is, right? So I will see you on the next one. And remember, if you want to partake on FundedNext, if you want to make a lot of money, and if you want to make money trading on FundedNext, and if you want to do so, the links are in the description down below. Get your account, buy your account, and pass it, and I will help you in passing the account. So once you get your account, let me know, and I'll add you in our WhatsApp group where we pass these accounts. And I will see you in the next one. Shocks, and I'm out.